Hello and welcome to Explain the Charts. Today, April 30th, 2025, we're analyzing the USDCAD, focusing on recent news and chart data. Recent headlines reveal that the U.S. economy experienced contraction earlier this year, while Canada's GDP also showed a decline in February. This data may be contributing to the pair's volatility. There are also reports of a potential easing of interest rates by the Bank of Canada, putting pressure on the Canadian dollar. We will need to consider this for the next few months. Additionally, ongoing trade tensions and tariffs continue to influence market sentiment, potentially impacting the USD. Let's dive into the charts to see how these events are playing out. Looking at the daily chart, we can see a series of candles showing recent price action. Notice the general downtrend that seems to be re-establishing itself after a few minor rises. This suggests that over the longer term, the Canadian dollar is overall stronger than the US dollar. Let's examine the area around March 2025, where we see significant volatility and a large price swing. Focusing on this range of candles in March, we see USDCAD testing support levels around 1.3028. This support seems to be fairly weak as it was only tested once, and it's a deep drop from the local highs. It was also tested near March 29th, which may mean that we could retest it again here soon. Keep an eye on this level as a break below it could signal further downside and a short opportunity. Now, let's switch to the hourly chart for a closer look at more recent price movements. The hourly chart reveals more granular details, showing potential areas of consolidation and minor resistance. We can try to gauge when to go long and when to go short. Zooming in, we can get a more granular view at a more recent period. Let's focus on the last few days. Analyzing this more recent price action of the last few days on the hourly chart, we can see strong support around 1.381. If that support gets broken, we could see a steeper correction down to around 1.37 or even 1.36. But a strong breakout above 1.388 would signal bullish momentum, with a potential target near the 1.39 range. I think retesting 1.39 is unlikely, 20%, and dropping to 1.36 is much more likely, 60%. In summary, watch for breaks below 1.381 for short entries. If we don't break that, we'll need to wait and see what happens. Be patient, trade smart, and until next time, this has been Explain the Charts. Thanks for watching.